Well, good evening, all. Ira Epstein, and here I am back in Chicago, and it is Thursday, the 3rd of November, 2022, your evening edition for your SPDR ETF stock market wrap-up. I'm not going to go in tonight to what I thought about the Fed chair. I did it in my financial market video, and if you're watching this, you have it right where you want it. It's either on the front page of our website, it's on YouTube. Go there, because it's a 20-minute long video. It's longer than I normally do. I covered an awful lot of ground, and I don't want to do it in each one of these. It doesn't make sense. Suffice to say, I'll give you the synopsis. Fed Chair Powell, just going to listen to Fed Chair Powell. Loves to have his members around him. They can talk about unemployment, and he'll go too tight and he'll hurt the economy. He's willing to do that. They have the tools to fix that abruptly, if need be. But the first thing is to get the genie, the inflation genie, back in the bottle. And that's what he's going to do. He realizes that what he does is impacting other countries. They don't have the strength of the economy the way that we do, or the labor market strength that we do right now. So be it. His job is Fed Chair of the United States, not the central banker for those different countries. I've given you the synopsis. Number 2, you may not go with 75 basis point hikes. They can go back to 50s and 25s, but they're going to go longer than shorter. Why? Because they'd rather overshoot, according to what was said yesterday. They need to see the sticky inflation unstick. They need to see things come down. There's a lag time. The Fed said it. And he said, forget the dot plot of September. You're going to have to get a new one come December, because things have been stickier, staying stronger, from jobs onto inflation, core inflation, PCE, all that information. Game over. Understand it. I don't care what Mr. Bullard comes out and says, or Miss Daly, about you got to help the economy, you can't go too far. He remembers Paul Volcker, and that's what he remembers. He's not going to be saying and have history say he came out too soon. I think he'd rather be too late, and he so much as said so yesterday. Let's look at PayPal. I don't think we've ever covered that here. And this market has been coming down with all this. Why? As the Fed embarked on raising interest rates and slowing things down, be it durable goods, big ticket items, all of a sudden you're not buying those items as much. You can't deny in America that life is back to pretty much normal. We go out, we go to basketball, football, baseball games, right? You go to the plays again if you have it in your community. You're not wearing a mask in most spots. You see people in it. I was in the airport yesterday. Some were wearing masks. People in the plane, some were wearing masks, but 95% weren't. And I'll stick with my number because I was doing counts. I was looking around to see just how many are doing it, and you just don't see that. So I look at how it all plays out, and I say to myself, that's very interesting as to how that works. So how would Visa, MasterCard, and all these do? Well, they've been coming down. And it's not because people aren't going out, but they're not buying those other ticket items the way that they were. That's got to be the only thing I can think of. I can't put it together. All right? The economy is robust. You can't tell me that the Fed chair didn't come out and say we don't have a robust economy. You can't say that we don't have people that are employed, and that the amount of jobs out there, they don't go away. I mean, if you quit one, you got 1.9 offerings for everyone out there. People can work and keep working. And today I was in my car, and there's a guy, I'm an out-of-work plumber, and he wanted money. He got mad at me, and I'm going, everybody needs a plumber. Why aren't you working? Lower highs, lower lows. Same thing here. Notice we had a crossover, and that's always important to look at on these charts. When you get these crossovers, and a crossover is when the red line, and I'll give it to you right here, your red line was over the green and you crossed over. That's often a sign you're going to go for whatever the most recent low on the chart is, okay? And that's how at least I teach it. And let's get over here and see if I can get this now to come up for you. Here we go. This will do it. Kaboom and kaboom. That's all I cared about. This is today. It's done its job. Does it always work? Nothing always works on a chart. But things work a lot more that are good things than the bad things. And that's how chartists do it. They're reading tea leaves. I'm a tea leaf reader. I'm not a fundamental trader. I'm not poring over the balance sheets. You know why? There's better people that can do it, but everything they know is going to be in the price as long as I come in after an earnings report or some event. Other than that, it's known, and I can trade off the known, and now I can say it's overbought, it's oversold, it's trending. I refuse to go through a big earnings report. I refuse to go through an FOMC meeting. Why? Because that changes the landscape, and if it changes it big, you're caught. I don't want to be caught. You'll say to me, but I'm a long-term investor. Okay, then why do you care if the market's going up or down? If it's a good company, it's probably going to be good or better 2 years, 3 years down the road anyways. So you're going to be averaging your price down. You've done your homework. You've decided, quote unquote, it's a good company. Technology won't knock them out of the box, whatever it is. I get it. By the way, I'm not being facetious. I get it. But as somebody like me, that's not what I do. That's not my client base. My client base, we're traders. We're looking how do we catch any of this and do our best to do it. Would I want my client to be short under a Bollinger Band? Heck no. Why? Because only 5% of the time do you stay under that band. How many times do I have to beat that into somebody or over it? So can it keep going lower? Of course. Why don't you buy it? Because it's going up. Because that's not necessarily how it's going to work out. But I know that mathematically, 5% of the time is all that it's going to stay outside of the bands, the upper and lower band. And if I miss a trade, so I got out early. Or I got you out early. You can stay. I'm telling you what I smell, the high percentage play. So you have an oversold market that's under the band, the trend is down, the objective was hit, let somebody else own it here. I'm looking for my clients under the right circumstance to be sellers, not buyers, until the chart turns bullish. Meta. Are you going to embed? Embed means that you take the red and the blue lines and you get them both to stay under 20 for at least 3 sessions in a row. So, first session, second session, third. You got your embedded reading. So, if the red line closes over 21, I have a game plan that wherever that 18-day average is, I would expect prices to get there. Number 2, it's telling me that until that occurs, there's a way to come in and sell rallies. I teach it in my enhanced Bollinger Band course. It's a set of defined rules. It's 13 video chapters. Take the course, see what it is, memorize it, look at it. I review it every single morning in my subscriber videos as well, and away you go with it. I love the game plan. Apple, I'm bearish, okay? First off, we've known that there's problems with the i14 Plus. Not the Pro, the Plus. People don't want them. Big disappointment. Why do I want to own a stock like that? Number 2, not through. You got up here to the Bollinger Band, and you began here with the resistance when I was still here. The 100-day and the Bollinger Band. And I said there, I think the smart money's coming out. You're not embedded. Did it go higher? It did. Big deal. So it got up towards the 155 area. Right now it's 138. If you came out there, what did you leave on the table? Very little. It's not about catching highs and lows. It's about getting out in zones when the chart is telling you, hey, the percentage play is changed on you. Disney. All the stocks had a nice rally. Disney, Netflix, all those because of Netflix. All right, let's face it. If you're in a streaming game and you saw Netflix's growth, that carried the market. But that was then, and now the market is dealing with a higher interest rate and coming down. I believe today is the first day that for the $6.99 that Netflix comes out with, you get 4 or 5 minutes every hour of ads. You can't download the show that you want. I don't know how many people want to do that anyways. Is that enough of something to give you better than a half price off? We're going to find out. That could be a model that pays for itself. So they're monetizing this. Well, I don't know if Disney will do it or doesn't do it, but everybody's got to be watching. I mean, the name of the game in streaming is spending money on shows, figuring ways to get new viewers all the time. That is the name of the game, and how to increase your price. That's what it is. XLF. Okay, you lost your embedded reading. So long, boys. So long. It didn't lose it yesterday. When did this market lose this? Take a look with me at this. Okay, this is yesterday. The slow stochastic was still there. But if it's lost, the only time you get it back is tomorrow, Friday morning, right away. If the market's not up right away, out most of the traders should go. In fact, I think they should have been out on the close today looking for these numbers. That's what I think they're looking for. Obviously, I'm wrong. If you make the highest high, get over the highest high the market just made, but I'm looking for this market to now decline. XLI, did we lose the embedded reading? Not yet, but you closed in an area where you don't have to lose it tomorrow. Had you closed near the day's low, you'd lose it right on the opening. Now you got to watch and see what it's doing. What is the trend? Well, you have a lower low, higher high. It's been running off the embedded reading, and those traders, if they're still long, will be all over this in the morning. They'll look at it real hard and make a decision. Any close under 79 in the slow stochastic, it's at 80.29. I predict they're out. They'll go to the sideline. Market could fall back over here. If it stays embedded, then you have to prove you can get through this 200-day average. It's lethal. That's the word I use. When you get the Bollinger Band, the 200, and they come together for the first time on a rally, that's where the smart money tries to come out. That's what I teach, at least. Am I right? Who knows? Never did embed, just got overbought to the upper band. Bye-bye. That's what I think. So you had a rally that carried very nicely in the semiconductors. All we kept hearing is how terrible they're doing. Well, this market went from the 130s, got itself up here to the 154 level for all purposes, and it's just let go. If you were reading the newspapers, you were bailing, and the trade was buying. Go by the chart. You know what I teach, how I teach in my charting course? I don't know if you're aware of this. My full course, I don't tell you the name of the chart. I take it off for a while because I don't want you to have a preconceived idea. Think about the logic of that. Now you're just looking at what the market is doing on the chart. Okay, the prices are there and everything, but I'll remove the name. I found that works. I used to travel the country, renting out hotel rooms and all, and doing this in my youth. And I would be at the money conventions and all, where you'd have thousands of people. I was on many of the committees there and doing this, and I'd have a room. Believe me, we'd fill the room up, all right? It could be 100 people, 200 people, 1,000 people, depends how big the convention was. But you play it and you learn how to play with it accordingly, and that's what we do. XLE, as you can see, you're still sitting here with an embedded reading. It's still friendly. I think the trade is buying this. Period. Looking for the upper band. They're out if the red line closes under 79. Gold, I am bearish for many reasons. Take a look at my financial market update, you'll see. But I think today was a short cover day on GLD. You hit the Bollinger Band. Again, 95% of the time, you stay within the bands. SLV, I think the pros came out yesterday on the challenge of the upper band. 95% of the time, they'll stay within the bands. If you embed, you're looking for breakouts. If you break out, there's a way to catch that too. I teach in my subscriber videos that whole technique, how to catch it if it's a legit breakout, where the stop would be and how that works out. And I review it all the time in those. Copper market, China, which way are they going? I mean, last week, and I know I read it over and over, I wrote about it, they were forming a commission to decide what to do with COVID. Or were they going to relax the policies? It sounded like that. Copper took off. Today, I'm reading that the head of the Ministry of Health is going, nope, they're staying with their COVID policy as is. Bingo, you fell apart yesterday, you fell apart today with the lower low. I think there's just total confusion here. TLT, does anything look bullish there? I don't see it. So I think the pros are now selling against this 96.80. I think they have a reasonable stop at 97.64. Today's low is 95.09. Believe it or not, if the market went to 97.64 and didn't take out 95.03, you could actually get a buy signal. In the meantime, the first thing that I think the pros will be doing is selling it at 96.80 with the stop there, seeing if they can get the market down to the Bollinger Band. In the dollar, as you can see, back into a bull trend. Higher lows, higher highs, closed yesterday over the 18-day average, follow through. But I don't like the fact that the market's got a reading over 70. That tells me it's overbought, and that means the flip-flop happens in the euro as you come down just like that. Now, as bearish as I am, I'm nervous about that because what happens when you do that, you're already oversold. Does that attract new money? I don't think so. But I cover all this each morning at approximately 9 o'clock a.m. Central Time. I come out and I will review with you what I'm seeing in the ETFs. There's over 40 charts. We'll do ETF spiders and individual stocks. I'm forever changing them, so don't get enamored by this. I'm adding and subtracting. We tried to keep up with it and we gave up because I'm changing them all the time. I listen to how my subscribers write me, what they like covered, where they see the action flow, and I adjust to it. They're the ones paying me, and that's what I'm going to do. But I cover every morning what's going on in Asia, what's going on in Europe, what big is happening. If it's the earnings season like now, I'll talk about that for a little bit. Who's got them coming up? Is there something we should be watching in it? And I give you the thoughts. Now, it's more than simplicity in this sense. As we're going through it, we're looking at daily and weekly charts, both. So sometimes I got a point to make, and on the Monday through Friday morning, I'll look at the dailies primarily, but then immediately what I do is I will go to a weekly chart to make a point with you, because I'm looking at them all. I have a lot of screens in my office, and I'm looking at things all the time. And as I'm looking at them, I want to point that out. On the weekend, we do weekly charts, and maybe I'll do a daily chart thrown in, the opposite, because I know a lot of you want to get a bigger picture. You're not interested, some of you, in the day-to-day gyration, but you certainly are attuned to the weekly charts, because going beyond that doesn't make sense. People write me, can I trade off a monthly chart? You can trade off anything you want, but why even doing that then? You like a company, just get involved. I don't know that the chart action makes any sense on a monthly. Where do you put a stop? The ranges are so big. I don't know how to do that. So about as far out as I'd like to see you go is a weekly, and I cover all that for you. How do you find out about it? You go to our website under research, or follow my finger here. You just move your cursor up. You'll see an icon appear. Grab it. Just give it a click. It'll take you right to that area. I'm Ira Epstein. I'll see you over the weekend. Remember, tomorrow is Friday, so I'll either do these tomorrow or I'll get them done on Saturday for you. You have a great weekend. Take care.